Hey, it's Rav. Welcome to the Everyday Investor TV show, the show that teaches you how to grow our money, your money, my money. God blesses us with a job, but imagine a life where you could work a little less and money could make you money to be able to spend it, your time with family, friends, engage in a purpose that's greater than yourself. That is what the Everyday Investor TV show is all about. Every week, I bring in an expert in their field, a different investment strategy so that we both can learn. Don't go anywhere. We'll be right back. Coming up, we're speaking to Darren Voros, and he's teaching us how to create a boutique apartment building.
And the reason that I like to stay under 10 units now, especially with the new change that just got implemented in Ontario, are the Bill 23 changes, which means that anything under 10 units now doesn't have to go through site plan approval.
Do you love private lending, but are starting to feel like the passive side of it isn't as passive as it once was? Is running for bank drafts, wires, and constantly picking new deals taking the passiveness out of your passive investment? The CapCap Mortgage Trust has a lending solution for you. In our fund model, we allow you to invest across a pool of diversified mortgages, generating stable returns in a set it and forget it model. If this is the type of solution you have been looking for your private lending, make sure to reach out to myself and the CapCap team so we can help you.
Hi, it's Darren Mitchell from Control and Compound. If you're a real estate investor or business owner, you know the cookie cutter approach to financial planning doesn't work for you. You've got to be in control of your money. You've got to save and store your money differently than other people. At Control and Compound, we are the wealth coaches for real estate investors and business owners. We show you how to save your money, grow your money tax-free, multiply your money tax-free, and spend it tax-free. To learn more, please check us out at controlandcompound.com/everydayinvestor, where viewers of this show get a complimentary education session.
Hey, it's Rav. A few years back, I learned about trading stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I am not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to the Everyday Investor. I'm speaking to my brother, Darren Voros. Darren, great to see you, man.
Hey, thanks for having me back. It's nice to see you again. It's been a couple months, but you're looking well, as always.
Thank you. So are you. But what, like, after we're done this, you're going to jump in the bed there and take a nap? What's happening?
I'm actually in Victoria traveling right now. I'm teaching an event this weekend, and then the following weekend, I'm hosting my Synergy Mastermind event, which you spoke at so graciously at one of our last events here in Canada. So we've got our event to wrap up this year coming up in 2 weeks. So I'm in Victoria for a couple weeks, and part of that is having to stay in the odd hotel room.
Well, no, listen, it's awesome, but more importantly, I want people to know you if they don't already, but you're just a great teacher. That's what I appreciate, Darren. I mean, you help people out. You help them, with their investment portfolio. You also allow them to invest with you. But predominantly, it's always great to just help people, to nurture them. And at the end of the day, they can make their own decisions, whether they want to get into the investment game or not. And so tell me a little bit about what you're doing right now in Victoria. And then also talk a little bit about Synergy, which I think I don't know where you've been, but every 3-4 months you guys meet. I know you were in Cancun in the winter, and then yes, me and you met out in Quebec. And so talk a little bit about what you're doing right now when you say you're doing some training, and then tell me a little bit about Synergy.
Yeah, I mean, what I've realized is I'm teaching development almost exclusively now. When I first started teaching real estate investing, I was kind of teaching the gamut of different things. But what I've realized is there's just a lot of people that want to get into development, and especially right now, I think that the best deals out there are not found in this market. They're actually created. And so that's what I've niched down into, is just teaching people how to do development, whether that's on a small scale or on a large scale. And so, that's essentially what I'm teaching now. I've got an event here.
You mentioned to me before we even got on, Rav, I want people to know about the middle scale. So you have the small scale, I'm going to buy a duplex, I'm going to buy an up and down or whatever and rent out the 2 units, the in-law suite. Or there's people, that are buying 50-unit apartment buildings. And you said, Rav, what about the 8 to 10 unit that we can create? And so hence the show, investing in boutique apartments. Look forward to dissecting that. And now tell me about Synergy. What's that, and how did it come to fruition, and who's it for?
Yeah, Synergy's in its 3rd year now. We're just about to wrap on the 3rd year. And basically, Synergy was created for a like-minded network of individuals sort of operating at an elite level. So there was really not a lot of other places as an investor in Canada for me to talk to other investors that are doing things and wanting to grow and scale their businesses. So I searched out for it. I couldn't find it, and we created it. Basically, myself and Randy and Steve of the Reinvestors. We have 65 members this year. We're growing to 75 members next year. We meet 3 times a year, twice in Canada, 1 at an international destination, and then we have weekly calls as well that we do. So that's a very high-level synopsis of Synergy, but it's one of my favorite things that I do throughout my week is get a chance to connect with the Synergy members for sure.
There's it's a small world, in the investment world. Once you start to get to know some players, we have 3-4 friends, mutual friends, that they have their own platforms, but they're trying to grow to 3, 4, 5,000 people membership, 2,000 membership. I don't even know what RAIN is right now, Real Estate Investment Network. I mean, but when we were in Quebec, I said, so what's the goal here? I mean, you're trying to get to 500 people, and you said back then, no, you want to keep it under 100 because there's relationships created and it's long term. Is that still the idea?
Yeah, absolutely. It's, I think once you get into these bigger groups, you lose that intimacy and you lose that connection with different individuals. And so Synergy has always been something that we wanted to keep, as we call it a family. It's a mix between, friends and family. But that's why we keep it at that intimate level of, under 100 people. And we plan to do that for the foreseeable future as well.
Yeah, nice. Okay, so you've done it all, but you personally, you not only teach it, but you personally like to create these boutique apartment buildings. We're taking a big house, I think. I mean, you correct me if I'm wrong, but we're taking a big house and we're turning it into 8 units, maybe 10 units. Talk a little bit about that and why you like this niche, as opposed to others.
Yeah, well, there's two reasons. I think, we kind of do this in 2 formats. We, to your point, we take an existing single family dwelling or something like that, a larger house, and we renovate it. So we make it, 8 or 10 units, or we find a piece of property. We do what's called an infill development. We actually take the old house, we just tear it right down, and then we build up from scratch, either, 8, 9, 10 units, something like that. And the reason that I like to stay under 10 units now, especially with the new changes that just got implemented in Ontario, are the Bill 23 changes, which means that anything under 10 units now doesn't have to go through site plan approval. And for those people that have never done a site plan approval, it's a long process. It can take up to, 12, 24 months. It can cost hundreds of thousands of dollars in consulting and engineering, and the city gets a say in what your building looks like and all these other kinds of things. So now with this change, they've basically eliminated those requirements, and we can go straight, assuming that we can meet all of the rights of the zoning bylaw, we can go directly to building permit. So I think speed to market is one of the biggest things that's challenging for developers. And so if you can go and your time from acquisition to, let's say, construction can be 6 months versus 24 months or 36 months, that's a huge game changer. Not to mention now, we've got development charges are being reduced for, all of these purpose-built rental buildings. And we've got the other benefit, the huge benefit is the new CMHC financing for these kinds of buildings, which allows us to amortize our loans up to 50 years. and we get the best rates on, mortgages, and, and there's non-recourse in some case, which is not normal for Canada. So for those people that don't know what a non-recourse loan is, basically, if you were to default on your loan, the bank comes after the asset and that's it. They can't come after you as a personal guarantor. So there's a lot of reasons why I like this missing middle, but the biggest thing is speed to market and how we can finance these things over the long term.
So we're looking like we're in the GTA, or are we looking predominantly in Toronto, Metropolis? Like where is a good fit for this? And then in terms of the conversion, not the ripping down what's existing and building from scratch, but the conversion, when you're buying these properties, you're not trying to steal them. You could buy at market value, because when you convert them, there's a lot of upside, I would guess. I mean, I'm just asking questions on behalf of, for myself and on behalf of the viewers. So tell me a little bit about that, the conversion, and where you're doing it, and where are you kind of priced in at? Like, what would be your purchase price on your last one, or the one that you're working on now?
Yeah, for sure. So the nice thing about the Toronto proper, that's where we are. I'm not even in the GTA. I'm not talking about the external parts of Toronto. I'm talking right in Toronto. We have 4 projects in the west end of Toronto: High Park, Dovercourt, Dufferin, Glen Lake. These are all areas of Toronto in the actual core, right next to subway stations. And that's a big thing for us, is right next to transit. And the reason why I like Toronto is because the zoning bylaws allow us to do anything from a single family dwelling all the way up to an apartment building. So the zoning is already there. We don't have to worry about going in for a zoning change. What we have to usually go in for is a minor variance application, which isn't very complicated depending on how aggressive you want to be with your minor variance applications. But that's usually a 3 to 4 month process to get in front of the Committee of Adjustments and get an approval. So we're already zoned for what we need to do. We just have to go for a minor variance usually, and then we can kind of hit the ground running. And in terms of pricing, we're purchasing right around that $2 million mark. That's about what we're acquiring, even existing properties, or the kind of the land for the teardown. And the reason why that's a bit of a game changer too is that you're getting into that next price point. And I always teach this to investors: like, go and search for properties in and around the $1 million, and you're competing with every other investor on the market, because they're trying to find that one to make it into a duplex or triplex or fourplex. And you're also competing with a first-time home buyer as well. In the Toronto market, $1 million is kind of your starting point, right? So when you get to that $2 million price point, you've now eliminated a lot of your other buyers, and so your competition is less. So we start anywhere from, like, we've picked up a couple at 1.85, 2.2 million, and on our Oakmount one, which is right in High Park, we picked up for 2.75.
And these are market value, pretty much?
Pretty much, yeah. I mean, we're buying them at market value. I mean, people that are selling these assets, they know the value of their properties. They know the value of their land, essentially, which is what they're selling for.
Okay, great. And I want to say that because a lot of people, a lot of investors think that you have to, and it's true in some cases, you make your money on the buy, but not when you're creating something new, not when you're taking something and changing it for highest and best use, which is what you're doing. In that case, you can buy at market value and you're still going to be incredibly successful, which we're, again, after the break here, we'll take a look at the numbers. So that opens up a lot of, you're doing 4 right now, probably just because you don't necessarily have the energy, manpower to scale. You could probably do 50 if you wanted to, if you're buying at market value, I would think. Or am I wrong?
No, that's the plan. So, I think just proving the model is always something that I like to do first before I try to scale. Because, until you've proven the model, then you have to be a little careful with scaling too fast. So we've got 2 that are completed now. They're operating. They're fully tenanted. And now we kind of know the numbers on those as well. We've got 2, one that's in construction and one that's about to be in construction. So that gives us a really good base point for figuring out our numbers and our strategy in order to be able to scale it.
Yes, but you're being humble, man. You've already proven it. You're already doing it. But, you're shrewd, you're prudent, you're wise, not just a handsome face. And so you're doing this with your own money, but, all this stuff that you're talking about, Rav doesn't want to do it. Can Rav and friends also partner with you and own a piece of a boutique apartment building as well? Do you do joint venture relationships or not so much?
We do. We do general partner limited partnership agreements, basically. And something that's really new and exciting for us is we've just created a fund for this. So people can invest their registered funds as well. And we're working through an exempt market dealer now. And so, that's a big change for me in just going about things, from a regulatory perspective and allowing my business to scale and bringing on registered funds is really exciting for these kinds of projects, because I think people are big believers in especially in the Toronto real estate market, but also people are a little hesitant to sometimes give us, that $100,000 or $150,000 in cash. But when they've got it sitting in their RSPs and they can direct it towards real estate and a long-term asset that's already generating income, has positive cash flow from the moment that you kind of buy it, that's a bit of a game changer for us. So super exciting. We're launching that in the next 60 days.
Well, good for you, man. I remember you were sitting in my backyard with me on the deck, and we were talking about, do you become an exempt market dealer or not, or do you hire one? And really, really cool stuff. Let's talk more when we come back from the break. We're talking to my good friend Darren Voros. He's teaching us how we can make money partnering with him or creating our own boutique apartment building. Don't go anywhere. We'll be right back.
Let's bust some RRSP myths out there. Number one, RRSPs are not a tax deduction. It's like, what do you mean, Darren? Of course they're a tax deduction. I get a tax deduction. No, they're not a tax deduction. They're a tax deferral. You have to pay tax, but you're just kicking that can down the road. So it does two things. It defers the tax, but it also defers the tax calculation. Does anyone listening, anyone watching think taxes are going to go down in the future? I think they're going to go up. So you're deferring the tax you would pay now on that money to pay it down the road, potentially at a higher tax bracket. RSP is not a tax deduction, a tax deferral. It's why the wealthy sometimes don't use them. To learn more, check out controlandcompound.com/everyday investor.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hello, everyone at Everyday Investor. It's Costa's First Access Condos, and I got something special. Now, a little known fact is that Pickering has more applications for condos than any other pretty much area in the country. They have 75 condo tower applications and 42 are approved. That's right, 42 towers are coming. Now, I got a project that's going to be first, and everybody knows that when you're first, that's when you make the most returns. Highmark Condos just launched in Pickering, around $1,100 a square foot, first of 42 towers. First Access Condos, don't be second.
Hey, it's Rav. Welcome back to Everyday Investor. I'm speaking to my good friend, Darren Voros. He's an educator. He's an investor. He's a good friend. Darren, thanks so much for taking time out of your busy schedule. You're on the West Coast right now as we speak. You're sitting in a hotel room and making time for little old Rav and the viewers. So I really, really appreciate it. We're talking, you can talk on anything and everything. I've seen you on stages and very wise man. And more importantly, you actually invest. You've been investing forever. You've done everything from A to Z, and you're kind of parking right now and teaching in and around how to make money, creating a boutique apartment, kind of, taking a single dwelling and converting it to 8 to 10 units, or taking land and creating 8 to 10 units. So what are we kind of looking at? You said you're doing this in Toronto. Black's not going to show up so good. Let's take yellow. So you're kind of doing this in Toronto. Your purchase price is in and around the $2 million mark. You said something about CMHC. We can get a 50-year amortization, so our monthly is less. But what is our down payment on something like this? We're considered commercial? Yes?
No, actually, with these properties, we can go in for a couple different things. Either if we're acquiring a residential property, we can go in for residential financing. Now, that could be with an A lender or a B lender, or if we're buying something that we're going to tear down, sometimes we do that privately. So we go and get private funds, or sometimes we have the option to actually do a construction loan with CMHC, but that's a little more complicated. So yeah, usually we're acquiring with residential or private money.
Okay, so on a $2 million purchase, my down payment, what percent am I looking at generally?
Probably 25% is a standard down payment.
25%.
Yeah.
Okay, so you're looking at $500,000.
Yeah.
Yeah. Okay, so $500,000 there, and now what?
And now we're basically, get into construction. We have to basically take this from, either a single family dwelling to this boutique, 8 or 10 unit apartment building, or we're tearing down and rebuilding. So we're, somewhere in that range of, let's call it $2 million for construction as well.
$2 million for construction. Okay. So
yeah,
construction, we're looking at $2 million. And so that's a lot of money. I bought for $2 million. I'm putting in $2 million. Really, I'm putting in $500,000, and this is $2 million that I'm putting in. But generally speaking, this is not worth $4 million anymore. What's your value after you've kind of done this off the get-go? Now, how long does this take to do?
Well, usually I say it takes us 6 to 12 months to get the permit to do it, and then another 12 months for construction. And we can be a little bit varying on either side of that. So it's basically, I say, a 18 to 24 month timeline from the time of acquisition to the time of completion. Okay,
so let's just say 2 years. And then what's the value now of this? If I bought for 2, I put in 2, that gives me $4 million. What are you seeing that these are valued at?
Yeah, so I think, we're now commercial in financing on the back end because we've created an apartment building, right? So it's all based on how much we can generate in revenue.
No, well, let's just do it for a second right now. So the net operating income, that's your revenue minus your expenses. What is that for the year?
Yeah, so we're generating about $25,000 a month. So that gives us a gross income of around $300,000. We have about a 25% expense ratio. So we end up with about $225,000 as our NOI.
Okay, so $225,000. And then you take that and you divide it by what's called a cap rate. And so in this area, what's the cap rate?
We're getting our valuations around, the 3.75 to 4%. But pretty consistently, we're seeing 3.75, which gives us about a $6 million valuation on this building.
So 3.75%, and that spits you out $6 million. So basically what you're saying is over a year and a half to 2 years, you have a $2 million profit. You could sell this or you hold it, correct?
That's right. Yeah, I mean, we hold most of our buildings now, but it doesn't mean we can't sell them for sure. They're in a position where they're profitable at this point. But we like to just hold these as long-term rentals now because we can finance them on the back end with long-term CMHC financing and just kind of ride off into the sunset in these Toronto properties.
Well, I'll tell you what, I'm going to try to find as many pennies hiding under the couch at my house. I'm going to come up with $4 million. You're going to do the work. We'll flip it. We'll make $2 million. I'll give you $1 million. I'll keep $1 million. Good?
Sounds good to me. I'm in.
But basically, generally speaking, you're looking at lifting this over 12 months to 24 months. You're lifting this $1.5 to $2 million.
Yep. The plan is then to get into just a long-term buy and hold strategy, which is basically, like any other multifamily investment, but now we've built it from the ground up. So very low maintenance on these buildings over the next decade, let's call it. And we're outside of rent control in Ontario as well because we're a new build. So we don't fall under the rent control guidelines. So that's another nice bonus for these buildings as well.
And do you pull money out of these? Do you refinance or do you kind of just let the money sit there?
So we like to hold these properties long term. And because the reason why we like to do that is because, we're basically getting a loan now on the back end that's going to service the debt that we use to pay for the property and also the renovation money. So we're left with the investor capital, the initial investor capital that we raised for the deal is usually left in the deal for that, 5-10 year period. And then we can pull that capital with a variety of different strategies at various timelines, but that's kind of what we look to do.
And what are you shooting for the investor in terms of a return on investment? No, go ahead.
We look at somewhere 15 to 20% annualized return for them.
Wow. And a component of that is cash flow.
Absolutely. So the first thing that we try to do is get them their initial investment back as quick as possible. And that happens through quarterly dividends from the cash flow of the property. And then the bulk of the remaining part of that investment comes on the disposition of the asset or selling the asset or refinancing the asset.
Yeah. Yeah. And real estate investing, generally speaking, it depends on, the seasonality. It's been a very interesting last year or 2 or 3. But generally speaking, it's pretty forgiving. I could buy a property, try to rent it out, get a little bit of advice from, Uncle Vinny, and I could do okay, break even, maybe lose a couple bucks because I wasn't too careful. What we're talking about, this is kind of the step up, or 2 or 3. This is not the first thing you do. It could be if you're incredibly educated and sitting at your feet for a year or 2, but generally speaking, this is one of the things where you kind of evolve into, yeah?
I say this is the strategy that comes after you've done your first couple investment deals, right? This is not something that normally the first time investor gets into. Let's say you've done a couple of flips, you've done a couple of burrs, you've done a couple of things, and now you're like, hey, what do I want to get into that next level of category of investment property. And this is the strategy that works for that. Or it's simply just one that people say, hey, I'd love to be investing in the Toronto market or in the development space. I just don't want to necessarily do it myself, and I'm going to let somebody else do it. And sometimes, those numbers work out better for people of just sitting back and letting their capital work for them instead of doing what I do sometimes.
Yeah, there's no right or wrong, right? It's different seasons in life and what you want to do. There was a time where I was very hands-on, and now it's a time where, I want to be passively and try to teach more and, talk about spiritual things, relational things, and of course, investing, right? So, maybe there's going to come a time in your life where you're just going to be teaching full-time as opposed to still being active. No, Darren, it's really great. So what's next? So what's next for Mr. Voros? Is this kind of where we're going? We're going to continue to teach development to people and park in this niche?
Yeah, for sure. I really love teaching, as you kind of mentioned right off the top. So I always will have that as a piece of what I do. But yeah, just teaching development exclusively, building Synergy Mastermind, building this portfolio of these missing middle transactions. And then I'm also looking at bigger properties and bigger projects as well. So as much as I love this niched area, we're doing some bigger, 31 units, 205 units as well, purpose-built developments as well. So and then of course I have my international stuff in Costa Rica, but that's another conversation for another day, perhaps.
Well, hey, let's do that. Let's do that when you have you back, and let's talk about, because you're building from the ground there, yeah?
That's right. Yeah. Building 6 houses in Costa Rica. Yeah.
6 houses, like 6 detached, or it's one big complex?
Yeah. It's a detached condo development. Yeah. And
why did you choose that? I know you love to winter in the sunshine, but why did you choose Costa Rica?
I think, from looking at it from an international perspective, it's a stable government. It's a vacation destination that is very highly regarded to be a safe location for people to visit. The real estate values in this area that I'm investing in are some of the top in the country. And yeah, I have a personal affection for it. I go there every year and spend 3 or 4 months of the year. So I was like, hey, if I'm coming here every year, why don't I build something down here and hopefully take advantage of that as well.
Yes, well, listen, appreciate you, and I thank you for being on the show with me today.
Thanks, Rav.
And thank you guys for watching. Without you, we would not have a show. If you want to see this show again or you want to see any of our other shows, make sure you go to everydayinvestor.com. You can watch them there, click on episodes. It's like watching on demand. Make sure you also sign up to receive the episodes right into your inbox. Look forward to seeing you next week. Same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.